Bulls enjoying a couple of back-to-back good news days. Yesterday, Bank of Japan. Today, unemployment claims came in under expectations, creating a little bit of a relief rally as markets fight for consolidation. Coach Matt, Coach Mark, bringing you all of the news today in 10 minutes. Matt, what are you seeing on the technicals after those unemployment claims?
Yeah, the development of patterns here, and that's what we're kind of seeing after the initial news came out on the initial claims. We'll cover that here in just 1 second, but you're just going through the development of patterns here, and it does take a little bit of time. You got to shake off volatility and to let it settle in, settle down, and that's kind of what's going on here as the market is digesting that initial gap down from the Japanese yen carry trade shock that came over the weekend. Now you're looking at a short-term bearish retracement against the SPY, and it's really struggling right here at the 90 EMA, a known momentum resistance zone. And so in the short term, you're looking at a little bit of a short-term downtrend. Pattern-wise, you're looking at a bearish retracement with resistance working at the 90 EMA. Now, on the longer term charts, on the weekly chart, you're seeing a good bounce back week, but that was to be expected coming from the fairly aggressive drop in price to start the week. Now, the question becomes, what patterns do we see dominate over the course of the next week or so? Do we see the double dip down to 510? Do we see more of the consolidation and allow those moving averages to catch up with it? What patterns really become interesting here against the S&P 500? And the market really has not separated itself yet from that specific price movement. The S&P 500 is doing very similar to what the NASDAQ itself is doing, which is doing fairly similar in the very short term to what IWM is doing. And so regardless if you're
They
looking
look a lot the same in the short term, don't they?
well, and specifically over the last like five
For
trades,
yes,
right?
yeah.
Once that news came into the market, and volatility has a tendency to kind of bring everything back in alignment. And then as volatility settles, we start to see where the leadership is going to be. We think it's more about the aggressive asset classes, but the market's all running on the same gasoline from a technical perspective. And so we just got to work out these short-term bearish trend, short-term bearish patterns, short-term bearish trends and patterns in the backdrop of a longer-term uptrend. It's going to be really interesting to see what patterns develop here.
Yeah, absolutely. And the economy and the news and will we have a recession? Won't we have a recession is going to play a large role in sentiment and technical development, I suppose. And Bulls got a good data point. Last week, labor data was really soft, stoked concerns. Today, they came in under expectations, Matt, providing a little bit of a relief.
If there was one thing I knew that was going to occur this week, we were going to get a miss on the labor side of the equation. In fact,
One way or another, right, bro?
one way or the other, it was going to occur this week. Interesting data point coming out on initial claims here today. Came in underneath the expectation, 241 at 233, and I do know, excuse me, I do know that people are celebrating that 233 number, but it's still a concerning number. But a beat is a beat.
A beat is a beat indeed. But
I don't know what else to say.
Well, I know what else to say. We have Goldman Sachs and JP Morgan increasing their recession odds. And these numbers are going to have extra emphasis in the coming weeks, right? JP Morgan increasing to 35% the odds of a recession, Goldman Sachs 25%. This is a narrative that is not going to go away overnight. And it is going to, these numbers, unemployment claims, retail sales next week, these numbers are going to have extra emphasis and have potential catalyst type movement, aren't they?
They are, and Goldman Sachs and JP Morgan is reflecting both the labor market environment from last week's number, as well as the follow up to that unwinding of the carry trade. And both of those banks bumped up their recessionary probability just slightly. And I thought that was appropriate. We have seen labor start to go up. We do have some concerning international situations with the unwinding of the carry trade. We do have the Fed talking about more aggressive rate cuts moving into the future. And on the back of that, Mark, one data point that nobody's talking about much very much anymore, but PMI numbers on the manufacturing side have not been very good lately. PMI numbers on the service side, fairly decent. Manufacturing side, not very good. So I do think that accurately reflects the economic risk over the course of the next, 5-6 months.
Yeah, absolutely. And while we see that economic storyline play out, stocks are going to have news. What do you have for us in some stock quick hits today?
Yeah, we got a couple good and very interesting stocks in the news here today, and we're going to look at it from a tackle top three perspective because there's so much news that comes into the market every day. You got to separate it from what is real, what is not, what is important, what is not important. And the top three stories of the day in the stock market are as follows. Number one, you got Eli Lilly coming out with a really good earnings report. Eli Lilly might not be a Mag 7 stock, but they are treated as such. Massively important company, healthcare giant out of the healthcare space. They came out with beats against both EPS and revenue. They increased forward-looking guidance, strong sales out of Moderna and Zepbound. Really good report out of Eli Lilly. We'll break down the technicals here in just 1 second. The second stock story that really does interest me, and for the third consecutive quarter in a row, Shark Ninja, and specifically the last 2 quarters, Shark Ninja beats, increases in guidance, and just a really good standout stock here for 3 consecutive quarters in a row. One of the surprising companies to come out every single quarter and just give good numbers, and good guidance. And it's a stock you got confidence in because of that fundamental backdrop on their last 3 earnings reports. And then OXY, energy giant Warren Buffett's company, OXY, comes out and they come out with beats. They don't provide guidance, but it was I would say the third consecutive stock in a row this week, specifically in earnings in the energy space, that is bucking the initial trend we saw in earnings season with, Schlumberger's miss, and then Chevron's miss, Conoco's miss. Exxon was pretty good, but it wasn't. It was kind of a wash year over year. This week you had Oxy with a good beat here today. You had Devon Energy with a good beat yesterday. You had Marathon Pete with a good beat on Tuesday. And so you have something brewing a little bit on the energy side with this week's earnings reports as well. Let's take a quick peek at their actual charts as well, just kind of going down the list here. Eli Lilly gapped up, but then sold the gap. Shows you a little bit of weakness at that 50-period moving average. And the weekly chart also has a little bit of volatility to work through here as well. In general, you got to let that volatility type simmer down. Got a little bit of a mixed time frame on Eli Lilly. Shark Ninja does not have a mixed time frame in any capacity because they just decided to break out of everything here today. This is known as a breakaway gap, as you break out of a neutral range. And not only do you break out of the range, but you run away from the gap. That is known as a breakaway gap on every single time frame. Look for momentum patterns on Shark Ninja. And then on the last one here, you got Oxy, and Oxy, very similar to Devon yesterday, coming from that low point, and one of the only stocks that Warren Buffett is not selling in his portfolio currently.
Yeah, no, Uncle Warren, he might be dumping a lot of stuff. He's not dumping Oxy right now. Shark Ninja put it on a watch list. Matt, we got not a lot of directional patterns right now in commodities, but for cash flow traders, a lot of things that look like they're trying to fight for consolidation, at least. What are you seeing in commodities?
Yeah, I can understand why you cash flow traders start to get a little bit of confidence in the commodity space. On the directional side, we're going to need to see a little bit more development, quite frankly. And you're getting it though. You're getting it. If the cash flow traders are starting to get a little bit interested, we're just a little bit more delayed on the directional side. We need to see a little bit more on the directional side. And I do think that's the case in the commodity space here. Silver near the 200-day moving average. You're looking at a little bit of pattern development that's going on, a little bit of slowing momentum consolidation, but you need to see a little bit more. Copper just keeps giving up too much edges, quite frankly, and you got to work back up. You have to work back up from a directional perspective. I still think 420 is the number, and so you're well underneath 420. You've given up a lot of momentum here. You still have, you know, a pattern development that is coming from the low point. You could be seeing a head and shoulders formation with the left shoulder ahead, fight back up, create a right shoulder type scenario. So it's still on the radar, but it's got certainly has got some work to do. And any day that ends in Y is usually a good day for gold. But on the directional side, it's just it's a mixed time frame right now. Short-term trends, a little bit of consolidation, nothing too concerning though. And on the longer-term charts, gold is just a standout on every time frame.
Listen, we have a great community. We break all of this down in depth in our Traders Lounge every morning. Matt and I are always there. Other coaches join us. This is a fantastic community. Come join it. TackleTrading.com, 15-day free trial if you want to give it a shot. And don't forget to like and share. Help us spread the good word.